Okay, so indicator-wise, this strategy is not that complicated. We will only be using the 50 period EMA on the 15-minute time frame, so this won't be on the 5-minute as the previous video. So 15-minute time frame, 50 EMA, and the Fibonacci extension tool. That's basically all you'll need. So as I previously said, we will be using price action, and that is a pretty hot topic to cover right now, and that's why we will be doing it in the following minutes. So stick around to talk about the price action. So price action, what kind of price patterns are we looking for? It's best if I draw them for you. So we basically want to look for formations that resemble a box. So if price does something like this, that's pretty easy. You just want to look for price to be ranging, and you set an alert on the top and an alert on the bottom, and wait for one of the alerts to be triggered. So we basically want to see a clear break of this box in either direction, be it to the upside, be it to the downside. Okay, in this case, once the price breaks out, we draw a fib on the first sign of retracement of the price. So we draw a fib from the beginning, from the igniting move of the breakout, sorry. So I will show that in the next minutes on real price action, but just for the sake of the video, let's say it started from here, the breakout, the igniting move. Okay, so what do we have here? So we have a breakout of this price action. Now we draw a fib level, and the main interest is on the 0.382 level and on the 0.618 level. As you previously recalled, we stated that we will be using the 50 EMA as an indicator. So the 50 EMA, let's say it will be looking something like this. Okay, so what we have here drawn with blue is the 50 EMA. Okay, we want the 50 EMA only to serve as the trend direction indicator and to serve as an extra confluence to our trade. Okay, so once we see a breakout, we set long positions. If we see a breakout to the upside, we set one long position on the 382 with the stop loss being at halfway distance from the 618. Take profit should be a standard 2 to 1 or 2.5 to 1 here. As you will see on the price action, there will be standard values here. So one position right here pending, and another position on the EMA and on the 618 level with a bit of a buffer. Stop loss, just remember to be below the 704 fib. Again, targeting this time 3 to 1. So as a rule of thumb, you want to target a 2 to 1 position on the 0.382 and a 3 to 1 position on the 0.618, because price can do something like this. Oh, sorry. So yeah, it may trigger you here, it may range a bit, then take you out, test the EMA and the 618 level, and then shoot back up. Okay, so in this case, we basically lose 1% in this trade, but we win 3% on the second trade. Same thing applies if you have a retracement, if the price breaks to the downside. Let me just do this for the sake of the video as well. So in this case, you will have two short positions right here, stop loss halfway in between the 382 and the 618 level, and another position right here with the stop loss a few points above the 764 level. Again, as you can see, standard, this one, sorry, this one will be at 2.5 or 2%, and this one will be at 3%. This is the rule of thumb. So if you lose this one, you will cover it with this loss. Of course, times will be where price will do something like this and then take you out, but we will cover that in the next section, which will be trade management. But I hope you understood this. So what we basically are looking for is ranging price action that gets broken out in a direction or another. Again, draw a fib on the igniting move and load up two positions on the 382 and 618 levels. each one targeting the base or the top of the fib. Another important thing here regarding price action, I'll just scroll back here, is that we want impulsive breaks. So if the price, okay, so you identify, let's say you identify this range right here, right? So you have alerts set here and here, all good up to now. But you see a breakout, something like this, so not impulsive, kind of like in an ascending channel. This is something that we want to disregard because it will mostly end up collapsing. Same thing will happen to the downside. So if you see something like this with no huge impulse, just disregard it. So we just want clear and concise breaks, as I showed you guys here. And we want a retest on one of the fibs. Again, having the 50 EMA serves as a nice confluence so that your trades can be even more accurate, to say it like this. Okay, I didn't plot the 50 EMA, so in this case the 50 EMA would have been something like this. So just for you to get a hang of it. So you can, the approach may differ from one person to another. Maybe you want only to take this trade when you have the confluence of the 50 EMA. Maybe you want to take this one as well. That depends on you. I prefer to take them both because as I will show you in the next minutes, the way we manage the trades is making this reckless entry strategy into a bit more calculated one. So stick around to see the trade management part of this video. Okay, so let's go through some price action for that, you guys, to better understand this trade and the way the trades are managed. So as you can see right here, we have a nice bit of ranging price action. So again, you can identify these zones. So you can set an alert right here. Sorry, bad drawing. An alert right here, one right here, and you're basically waiting for one of these levels to be broken either to the upside or to the downside. We still have the 50 EMA to serve as confluence and as trend direction. So as you can see, the likelihood of it breaking to the downside is increased given that the price is under the 50 EMA. But again, we just react to what happens. And as you can see, we have a nice breakdown to a nice break to the downside. In this case, we will draw fib from the igniting candle, which is this one. So basically is the first low candle that you find that breaks the trend. And what will we do here? So as I previously said, you set a pending order right here. Stop loss halfway in between the 382 and the targeting 2 or 3 to 1 right here. And another pending order on the 618, which is the same as the level that got broken, or roughly the same. Stop loss above the 764 level, again targeting the bottom of the fib. So we have two trades open now. I'm not sure if this one got triggered. Okay, so this one gets triggered. And this is the fun part, guys, now. So we are in this trade right here. So how we manage these trades, given that we have 2% on the line basically, so now we have a 1% trade open. Once this trade gets to 1-to-1, we move the stop loss to break even. Okay, so now the stop loss is at break even and we wouldn't have lost anything on this trade. Okay, so break even up to now. We still have this level right here. Again, you leave your trade as it is and manage it if it is triggered. And we barely get triggered, and unfortunately we get taken out of this trade. But again, that's nothing to be worried about. So as you can see, we move the stop loss to break even once we get to 1-to-1, and then we trail the stop loss by increments of 1%. So if the price goes to 2-to-1, let's say, in your favor, your stop loss will be at 1-to-1. If it goes to 3-to-1, the stop loss will be at 2-to-1, and we usually don't target more than 3-to-1. So that would be your final trailing of the price. Okay, so moving on. as you can see, we still have this break of a level, and as you can see, we are just breaking to the upside right now. But again, what are we truly breaking? Because the range still stays the same. So this is a very important thing, guys. You still see these ranges right here, so you don't want to be trading in between. You want a clear breakout to either side. So we will just wait for a breakout. Okay, so this is a nice and impulsive breakout. Let's see if it continues. Yeah, so it continues. Okay, so we have this level and it still goes. Let's see the first green candle, which is this one. Okay, so we look at this as a box, as a range basically, that was broken to the downside, as you can see, in a very impulsive fashion. Now we draw a fib. Actually, this is the igniting move, so you have to take the highest point. Okay, and right now, what do we have here? So we have two trades again. One that you just have to leave a bit of a buffer in your direction. Stop loss halfway through, so let's say 75 points here, 7.5 pips, targeting 3 to 1 with the first trade, and the second one will be on the 618, stop loss above here. So this one will have 11 pips, but the risk to reward ratio will be 1 to 3.5. And this is our trade setup, guys. You just look for the price and see what it does next. Okay, so if you want, you can amend the fib, but this change isn't that important. Okay, so we get triggered in our first trade, goes a bit in our direction, and this, as you can see, this trade, as you saw, it went initially down. So this is what I'm saying, it's important. Once this trade went to 1 to 1, you set your stop loss to break even immediately, so you wouldn't have lost anything on this trade. And now you have this trade open, the one that also has the 50 EMA on it. And let's see how this one goes. And as you can see, this one goes perfect. You get triggered. Now your stop loss will be something, so you are at 2 to 1 here, your stop loss will be at 1 to 1, so you have 1% already in the bag. Once you go above the 3 to 1, which is the case, you have 2% in the bag, and now you're basically just waiting for it to reach your final target, which will be 3.5 to 1, and it does. Okay, guys, so I showed you some losing trades, some winning trades. As you can see, this is a pretty aggressive strategy with 2 entries, but it has solid foundations both on price action and on the indicators. So let me know what you think about it.